After a dismal October, stock traders are rejoicing in multiple positive days, but have the underlying issues been resolved? Has anything been done to fix the obvious and apparent problems that continue to weigh down on the actual real economy? Of course not. But have no fear, the Fed will save us all. You came here for the truth, so let me unveil that for you. There are no unicorns on this channel. Unfortunately, the unicorn GPS is not here. If you're looking for the money GPS, if you're looking for the truth, then you've come to the right place. Let's begin by taking a look at this. We are looking at the European markets here, everything from Germany to Italy, and you could see what has happened over the course of October. The stock markets trade in line with each other. Now, you may have more problems that are present in one country or another, but look at this right here as they basically all fall in lockstep. You can see that Italy has been suffering now because of the issues that are going on. Basically, they're having this turmoil in the government. They have a problem with what's happening with Europe. They're saying they can't meet their so-called fiscal budgets and everything that they've set up, and they're trying to come back with negotiations, and it goes back and forth and back and forth, and it reminds me a lot of the fiscal cliff that we see in the United States every few months. We get this whole problem that they're going to have to shut down the government, that they need to expand the presence of government every single time, and they always have these problems. Oh no, is the government going to get shut down? We're going to do it. Nothing even comes out of it, and it's a ridiculous proposition to begin with. There is an unlimited amount of money that is being spent by these governments, and unfortunately nothing is ever being resolved. That's the way it goes, and here we are. This is looking at basically a chart that I've shown you many times before. This is the US MSCI USA price return and the world excluding the US, and you could see the difference here that since the beginning of the year, the world stocks excluding US have taken a dive, and this is showing us nearly 13%. And then you look at the US, where it's basically erasing all the gains that we've experienced so far. Now, by the end of the trading session today on Thursday, we may see this come up a little bit. However, what happens in the following days, we really don't know. So what has happened here is that the US and China apparently are getting along again. I'll probably make a video in 8 hours from now, and it'll be the exact opposite story. It is a fairy tale once upon a time. Now, looking at an important chart, and that is the global equity market cap, because when you look at stocks, you can't just look at Apple, you can't just look at Amazon, and Apple's earnings are not significant to what we see in the entire global economy. All right, I do understand that they're a very important company. When you see the magnitude, the size of this company, yes, I do understand. However, you need to understand what happens globally. Okay, so this is what a lot of individual traders do not look at. They're looking at 200-day moving averages, 50-day moving averages. They're looking at the FANG stocks, they're looking at ETFs, and they're looking at other things that do not take into account what's happening outside of their own borders, and that is truly nearsighted. Now, when you look at the chart here, you could see that the amount that it fell here in such a short period of time, in this 1 month, hadn't been felt like that since 2008. So clearly this has been a significant decline in this 1 month. We saw other significant declines going on right here earlier in the year, okay? And we also saw 2015 being a really apparent weakness that was going on everywhere from Europe and China and everything. So that was one I wanted to mention as well. Now, looking at this, the absolute most important factor that I will bring up every single video if I have to, and that is the central bank balance sheets. They control everything. You can see here that the canary in the coal mine, perhaps, the global systemically important banks are down. I believe the last time I checked was about 30%. So this here shows us that they've gone beyond the bear market. I mean, it's unbelievable to see how far these have dropped. They haven't stopped. They have not stopped. While the U.S. markets have been, up and down and sideways and erratic, the global systemically important banks are just continuously declines for the most part. Yes, of course, there are certain periods of time where they go up, but the trend is clearly down. And the red line that you're seeing here, the MSCI World, is obviously, excluding the US in this case, down significantly this year as well. So we need to track everything, not just the NASDAQ, which has taken a beating this year, but it obviously brings us back into the levels that we can see, looking at all the weakness basically, and that's what we need to stress. But what is happening, and as far as the monetary system is going, what exactly is going on to make us realize that something's not right? Velocity of M2 money stock, okay? The velocity of money. This is a topic that will never get coverage in the mainstream news ever. You'll never ever see it, okay? They don't understand it because for the average person watching the CNBC and the Bloomberg, and they're trading based on the information they're seeing there, they don't care about this. They only worry about intraday. They only care about that particular trading day. I've seen this with my own eyes. I know how these people work, and the algorithms are doing it on an even more micro scale. They don't care what's going to happen tomorrow or the year after. They care about what's going to happen in the moment of that trade. They literally do not see a minute in front of their noses, and that's just the way they've been programmed. This year, the velocity of money, now, this is showing us over the last 20 years. Basically, you have to think of currency like current, like a wave. It's constantly in motion, okay? Constantly. And when this money stops to move, it starts to collapse the system. Interesting. Very interesting. Now, this tends to correlate with the rise in interest rates. As the interest rates rise, you can see the velocity increasing. Not fast enough. Probably not going to happen anytime soon. But I just found that to be an interesting correlation. It's not complete, it's not direct, but something to note. You could see right here in the bottom right corner, as well as last time around, what had happened. But looking at this, I always need to think of what exactly are the central banks planning on doing? How are they going to react to this? Printing more money doesn't fix the problem. Will they intervene, and will they buy stocks directly? I think that could be a realistic possibility in the next crash. Stocks have moved plus or minus 4.5% on earnings, the largest average earnings move since the financial crisis. So looking at this, we can see what has happened. I've been talking about this. Even though earnings should not be significant, they clearly are right now, particularly through 2017 into the present. This used to be something that, it really wasn't that important. It really was something that obviously the financial system is waiting on, they're looking at, they're making sure. But in terms of the significance in how much it could push a stock up, this is unprecedented, the levels we're seeing right now, going back into the financial crisis territory. Why? Because at these times, you need every little piece of good information. Anything you can get your hands on, it's so helpful. Please give us anything. Oh, is China talking to the US today? Great. All right, they're not getting along tomorrow? Oh, the central bank said one word that they didn't say last time, forward guidance, as they call it. Oh, this is excellent news. We're going to make the stock market go up today. And other silliness. I mean, come on. Is anybody falling for this? And there's actually a buyer, if you could believe it, a hedge fund, taking a stake in Deutsche Bank. And I thought it was funny because they said that this is one bank that's, it's going to be robust and it's oversold and so on. I think they could probably get bailed out at some point. I just have a question. What mechanism will they use to bail out Deutsche Bank? It's too big. I'm curious to know what mechanism. I'm talking about printing money. How can you possibly print enough money to bail it out? It just doesn't make sense to me. And last but not least, central banks. Right now, they have upped their spending on gold to the highest level in almost 3 years. All right. So we can see these. By the way, the World Gold Council, they have an email that you can subscribe to for free, and they will send you updates regularly. They don't do it often, so it's not spammy, but if you get on there, they will email you and just give you updates on gold if you're interested in that. And even if you're not a buyer of it, you should still be understanding what's happening in all markets, okay? That is just one of them. Russia's central bank led the buying, purchasing more than 92 tons of gold. This marked the country's biggest quarterly net purchase on records that stretch back to 1993. It's very obvious what they're doing. They're going away from the US dollar. They're purchasing more gold. Very clear, okay? So that's what I've wanted to end the video with. If you found this informative, please give me a thumbs up, and give me a thumbs up. It helps to support the channel. So I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these 2 books have it all. In these 2 books, you get everything you need to know from A to Z. You will figure this out by understanding the foundation, the history, and then applying that to what you're seeing today. So check it out. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.